Maddie. Welcome back to Vitality Vault with Vitality Ventures Group, a production by Vitality Lens. Today, we're joined by Nicole J. Aspenson of Five Rings Financial and our host for the region's Wine, Women, and Wealth. In today's podcast, we touch on women and finance, a topic we can all learn from. If you'd like to connect with Nicole, I'll have all of her links below. Empowered women, empower women. Take it away, Nicole and Shannon.
But there's something about, like, no matter how up, down, left, right I'm feeling, if I go to Seaside and I just walk on that beach, I'm like, yeah, I'm happy.
All grounded.
Right?
Yeah.
Roddy always says that. He comes down here to the river and he puts his feet in the water to ground.
Yep.
I'm not sure what that means.
So it means you're connecting with the earth. You're connecting with energy.
But I wonder why water it just changes the way we feel. I mean, for me,
so
it does.
grounding doesn't have to be water.
Oh, you can just step on the earth?
It's earth.
Yeah. Isn't that interesting?
You can go walk out on the grass, or you can go down to the waterfront if you like the water, but it's about the grounding to the earth.
To me, it's the water.
Yeah.
I was like, we were walking on the beach, and I'm like, Japan. If we just keep going that way, we could be in Japan.
My son started working, and he just told me that if there's a job opening anywhere, I can transfer or apply. I can even move to Japan, he says.
Japan? My son, since birth, has been fascinated with Japanese culture, with Japanese people. His plan is to move. He's never wanted to go to college, and I don't know if you have a feeling one way or the other.
My feeling is it's not for everybody.
It's not for everybody, and I don't think it's as necessary as it used to be. I mean, I graduated from Rutgers, and when I grew up, I actually didn't know other people didn't go to college because in the household I was in, it wasn't a discussion. I was thrilled. I couldn't wait to go to college, and I loved college. But he's always been like, no, I don't want to go. I'm like, okay. Yeah. But now we have so many options.
Totally.
I mean, just what we can learn, and within a second you can find the answers to everything. There's no more huge debates because you could go on Google and find the answers. But thank you for joining me, Nicole. You're going to have to tell me how to say your last name, Aspenson.
Yes.
See?
Aspen, like the city, S-O-N.
Is that?
It's married in. My husband is from the Midwest. His dad was from the Midwest. He grew up in L.A.
And I love, you have such a unique brand. You're always wearing purple.
Or blue.
Oh, is blue
if
part of it?
If it's not purple, it's blue. And blue is in my logo as well.
But is it a bluish purple? I feel like every time I see you,
my shoes are bluish purple, I feel like.
There we go.
And I got, the purple and blue on my nails today.
And is that something we'll tell our listeners what you do, and
sure.
You're committed to helping women have financial health, have financial freedom. Am I right with that?
Absolutely. We start with education.
You start with education, and you offer these Wine, Women, and Wealth meetings in the area we're in. Do you do that? Is that something that people can see online? Are there webinars?
I do have a business partner that does a monthly virtual Wine, Women, and Wealth.
And it's just
She's in
education?
Hawaii. We were talking about water and dipping.
She's in Hawaii right now.
She's in Hawaii, so maybe we should go visit her.
I think, all right, bye, Maddie.
In person,
And Maddie's like, no, bring me. No, Maddie can come too.
She can come. She has to come to the
Is she working in Hawaii, or is she on vacation?
No, she lives there.
Oh, she lives there. So is this program that you offer, did it start in Hawaii?
No, it actually started in California. So that business partner and I both met each other. We were living in California when we got into the business together.
And it was like, we want to just teach women.
Yeah, well, our mentor had already started the Wine, Women, and Wealth. So Denise Aaron is the founder of Wine, Women, and Wealth. She had moved from Colorado to San Diego area, didn't know anybody there, and was like, I need girlfriends, and I love wine. So maybe if I got some ladies to come to a wine bar and have a money conversation, I could help them and start building my business.
And I could be wrong about this. Maybe this is just personal, but I feel like money conversations and women aren't, it doesn't feel natural for me. It's a little, it's scary, it's uncomfortable. Yeah. I know I wasn't raised having those conversations with my family. I don't mean to be sexist, but I think my brother was. You know what I mean? So it was never a comfortable conversation. I think that's wonderful you're doing that. So if someone comes to Wine Women in Wealth, besides the wine, which is a reason enough to
go. Or sparkling water. Not everybody wants wine. So
that's
you don't
true.
have to drink wine. If
that's
you come to
true.
Wine
You don't
Women
have to.
No.
Okay.
But
you didn't know me in college. I was very big on the peer pressure. Drink the wine. I'm kidding. I've learned. I've matured. Although my son called me very immature the other day. Oh. You know, we were in the grocery store and like Stone Temple Pilots came on as part of like music, and I'm like, rocking it out. So what kind of things, if someone is, first of all, it's a little nerve-wracking. I don't think it can feels
scary.
Natural.
I don't know where to start. I'm not good with numbers.
I'm embarrassed I haven't done anything up to this point.
Those are things we hear all the time. So Wine Women in Wealth, we don't talk about what to do with your money or numbers. It's more of our mindset first. So we have money mindset conversations.
Okay.
To see if there's stories that need to be rewritten. My son taught himself, well, not fluent, but was teaching himself Japanese by watching anime.
That's what TK's doing. He's doing the same thing. And he was listening to a podcast the other day, and I'm like, what are you listening to? And he's like, it's Japanese. And I'm like, what is it? What are they saying? He goes, I don't know. And I'm like, my first instinct was, well, that's ridiculous. However, my partner came over from Moldova 20 years ago, and he taught himself English by listening to, of all people, Rush Limbaugh on the radio. He didn't know who this person was. Right. He put on the radio, and that's how he taught himself English. So I think it's that immersive experience.
Immersion makes a huge difference.
Japanese seems like such a difficult language, so.
Yeah, so my son had the English subtitles on.
Okay, right.
So that he would, I think, get a better understanding of the language.
Yeah. Yeah. Okay, so if someone wants to mindlessly save, where you're like, oh, but I need 100% of it. Is it a 10%? Do you do that? You say, put 10% away, that's it, whatever.
You know, the rule of thumb, you should be saving 10% of
Is that what it is?
For the future. However, if you can't save 10%, the habit of saving is more important than how much you save. Because if you can only save 1% or 5%, and then when you get more money, you get a raise or build your business, work up to that or more to make up for time, right? The worst thing is to never stop saving, or you get to 60 years old and go, oh, I probably should have thought about some savings, and now you're not in the habit, and you're that far along, closer to retirement with nothing saved.
So do you, in Wine Women in Wealth, and you said you talk about habit, do you give financial advice? Are you saying put your money in, again, I know nothing, IRAs, 401ks,
At Wine Women in Wealth, we don't.
You don't?
We don't talk about what to do or where to put your money. It's more of the mindset conversations, how do we think and feel about money? We have to start there before we can move forward. And then I teach financial literacy classes that are the nuts and bolts, the principles of money that everybody should have learned growing up, and most people didn't.
No, they didn't. I mean, I think if your family didn't teach you didn't learn it in school.
Right. No.
So then where do you learn it?
Yeah.
I guess. So
Depends on where you went to school. Mm-hmm. Depends on where you went to school. I hear that a lot.
Or what you went to school for.
Well, I went to, even just high school, it was a requirement to take personal finance to graduate high school.
Right,
I went. But that was only like 2 or 3 states in the country that required that.
Yeah, no, we didn't have that.
They still don't.
Isn't that, well, but now I guess people, if they want to learn, you have the ability to go anywhere, and you can go online. You can go to one of your webinars. Right. Yes. So it starts out with the mindset, which is great because, again, it's scary. These things that we don't know that seem so difficult. Not difficult's not the right word. Just like,
it feels complicated.
It does. I'm sure it's not.
Right. It's not as complicated as people think. If you have the right guidance.
And then there's the embarrassment if you've never done it. Yes. And you always feel like, well, I'm going to ask a stupid question.
Well, people think they're the only ones that don't know. That's the key, is nobody else knows either. You aren't behind everybody else.
And
Nobody learned.
When is it too late? Ever? Is it ever too late?
It's never too late. When's the best time to plant a tree for shade?
Well, see, and I'm not a real gardener.
20 years ago, right?
Right.
40 years ago. When's the next best time?
Today.
Exactly.
So if you're out there and you're 60 years old and you're like, holy shit, and it is, you don't want to get in the position, God forbid, but if you've been married and your husband has taken care of all this kind of stuff forever, or your wife, when my father passed away, my mother handled everything. He was the one that was lost, because he had the big career. He didn't have the time, and my mother handled it all. He literally didn't know what to do and blew a lot of money.
I'm glad you pointed that out. It does go both ways.
It does.
One spouse solely taking care of the money is fine if the other spouse understands what they're doing and where things are. They need to be involved and understand what's going on.
So it's like a monthly, let's sit down, this is what we do. But yes, but even with me, I'm like, I don't want to do all that. You take care of it. I'm taking care of what I'd like to take care of. You take it, but even an email, you can send an email just so you know, this is what we've got going on.
Yeah.
This is...
Monthly conversations are a good idea.
What if someone hasn't done anything and they're 60 or they're 50 or whatever? Are there ways to fast track it? Like, I mean, obviously put more money in savings and then put that savings in what? Is there a starter pack?
There is a little bit. I specialize in safe money strategies. So when the market is growing, our clients' money is growing. When the market falls, we keep our money. We never drop or lose money due to the market. So the first place to start is not lose your money. At least some of your money that you know will be there for retirement.
Okay.
Later, right? And then you're right. If you're starting later, you need to put more in. Or you might need to work a little bit longer and save longer period of time if you started late.
And is there a minimum amount? So if I'm coming to you and I'm like, I have no savings or I have 30 grand, okay? Can I give you 5 and you do something with this?
Absolutely. We can start as little as like $100 a month.
$100 a month?
And for 20 and 30-year-olds, maybe even $50, $75 a month. So start to have it now. And let's get it going and get it automated so you don't have to think about it.
So we'll go back to TK who I was talking about. When he gets paid and he puts $50 in savings or whatever, he should give it to someone like you because that money's now growing.
And the compound interest that's working, you need a small amount of money if you have a long time frame ahead of you.
Okay.
Right? You have compound interest and the habit of saving are the two most important.
Do you have to be 18?
You do not. You might need to have a custodian on the account until you're 18.
So realistically, teenagers, the first job they have, they should start something.
They should start something.
And is that something that becomes automatic? Or they, it's that, I got paid. Not this month. This month I think I'm going to go buy a new PlayStation game or whatever. But it's something that could automatically come out?
Automatic. Just like their taxes come out automatic, so they should pay themselves. When we say pay your future self now, pay yourself first. Then go buy the games and the fun things.
That's fantastic. Have you always been interested in this?
Yeah, I was in accounting and bookkeeping for about a decade before I got into this. And then when I learned that there were safe strategies, I had watched my mom lose half of her 401k in 2008. You probably remember that. Mm-hmm. That was 2 years before she had planned to retire.
Lord.
I'm not signing up for that plan.
Right.
When I learned that there were safe strategies and that, oh my gosh, I have 30 years ahead of me potentially for compound interest to work in my favor. I need to share this with more families and business owners.
So you started this based upon seeing what your mother went through.
Yeah, and knowing I wanted something different than that. Mm-hmm. I didn't know there was anything different. It took a couple of years. It was 2011 when I got into the industry, started learning this. So I started part-time, kept doing my accounting business until I found out how much more money I could make here and how much more fun it was to help people, and the light bulbs and the education happening. It took me about 2 years to transition to full-time in financial services.
So are you a CPA?
No, I did bookkeeping and accounting. I was a certified QuickBooks Pro advisor.
Okay.
So I would do a lot of education and teaching in that role as well. I didn't just do books. I would teach the $12 an hour person how to do the data entry properly, and then I would come in monthly and do the closeout and reconcile the bank accounts. So the business owner had two sets of eyes on the person cutting the checks.
Are you originally? Is this all from Sarah? You originally? Did you grow up here?
No, I grew up in Salt Lake City, Utah.
Okay.
I followed my mom and spent 4 years in Vegas. When my son was about a year old, I told his dad, I want to leave. I don't want him to grow up here. So we went back to Salt Lake, and my son's asthma was really severe. It was a full-time job to keep him breathing.
Oh, wow.
When he was 5, we ended up moving to San Diego. So I moved here 4 years ago.
Oh, you've been in the Portland, Vancouver area for 4 years.
Yeah, we moved
from San Diego.
2020. Yep, I got remarried in 2018.
Okay.
Divorce in the middle there.
Right. So Salt Lake City is where you grew up?
That's where I grew up.
I've never been there, and I heard it's fantastic. I just planned my next girls trip. It happens. There's less time in between the girls' trips. We're down to like 3 months now.
Awesome. Sure.
We're going in the end of September.
Okay.
And we've been doing it for so long. Now we decide where to go based upon where is a flight that's easy for everybody, because everybody comes from different areas in the country. Easiest to get to. Yeah. Hopefully no stops. It doesn't cost a lot of money, and we haven't been. Salt Lake City's on our list. Okay. I think for after this one, we're doing Charleston, South Carolina. Okay. You think I'd been there from being from New Jersey, but I haven't. None of us have. But I heard Salt Lake City is really beautiful.
Yeah, it's beautiful.
Wow. And do you go back there at all? Do you have family there still?
Some has moved out. My dad moved to California long before I did. I think I was a sophomore in high school when he moved to California. My mom moved back to Salt Lake when we moved up there, but then moved to St. George later after we left.
And then how long did you live in California? San Diego's gorgeous.
20 years. It is gorgeous.
So where do you so you've kind of made homes, like home, and now where do you feel like home is still? Because I've moved around a number of times too. I like moving. I just like it. Where do you consider home? Salt Lake?
No. So after being 20 years in San Diego, Salt Lake wasn't home anymore.
San Diego, then.
But I went to San Diego in February. We do regional trainings around the country. And it didn't feel like home anymore.
Really?
That shift where I'm at now.
Now you're like
home.
visiting there.
Now I was a visitor for the first time, I think.
How do you like it in the Pacific Northwest?
It's gorgeous.
How do you like the winters in the Pacific Northwest?
They're much more mild than Salt Lake City.
Well, they're more mild than New Jersey, too, but they're freaking gray and rainy as fuck, man. I'm sorry if the cursing happens. I'm tired. So you travel around the country with Wine, Women, and Wealth?
With Five Rings Financial.
Okay. Okay, which is...
So I'm partnered with a company called Five Rings Financial. That's the education, the teaching, where we do business. About 80% of people that come on board at Five Rings Financial want to just go help people. About 20% of us want to build our own agency, and that's where my Anchor Financial comes in. What we offer is peace of mind, hope, security, safety, and then my husband is a retired naval officer, so the Anchor ties it all in for me.
Oh, how wonderful. Yeah. Was he a career guy?
He was. He went to the Naval Academy, and then he did 20 years in the Navy.
I love the Naval Academy. We used to go and play lacrosse games there. Yeah. Right on the water. They have a field. Yeah. Oh, my God. Annapolis is beautiful. My sister lives right outside Annapolis now. It's beautiful there.
It is. The first time he took me, I'm like, you went to school in a museum.
It's amazing, isn't it? It really is. It's very windy and cold in, like, the spring, with the water there, but it's a beautiful area.
We usually go in the fall for reunions at the Naval Academy.
With everybody in their old dress.
Yeah,
so Army-Navy game, I'm assuming, is a big deal in your house.
It is.
Yes.
Yes.
Okay. Who won the last one?
We always go to a football game while we're at the reunions as well.
Do you do the Army-Navy game?
Yes, we do. Mm-hmm. Not as much here. We're just separated away from a lot of
There's
alumni.
Not a big...
In San Diego, there's huge alumni. There's Army-Navy couple around town where 100 people go watch together. Army and Navy go watch together. It's really cool.
Really?
Yeah.
Oh, that's interesting. We used to, being from New Jersey, we used to go to West Point a lot. Mm-hmm. My best friend married a West Point grad, so, it's very...
A little banter.
Yeah, it's good. My nephew went to West Point, and so...
There's a group that does it out in Tigard.
Really?
In Oregon, so we've been out there.
I have to find that. I heard there's a Rutgers group out here, Rutgers graduates, but I'm like, I mean, it's not like we have the greatest football team, or we used to. It's better now, but,
Well, it's ingrained in in the armed forces, the academies. It's really ingrained.
My uncle was a pilot in the Naval Academy, flying onto the... whatever.
Carriers.
The carriers. And they were based out of Alameda for a while. So we used to go visit them there. Mm-hmm. It's beautiful. It's very nice. So if someone... Okay, so let's get back to talking about the money. So there's no too late to start. Ladies, if you're listening to me, start freaking now. I know it's something we push off and we forget. Or we don't forget, we just... don't want to do it.
Yeah, it's easier not to. Mm-hmm. It's easier to not think about things than to take action.
So if someone goes online or comes to one of your seminars, what can they expect besides let's get comfortable talking about this. Right?
Yes.
Then, okay, now that we're done, this is what you can do?
Absolutely.
Okay.
So let's get comfortable talking about this. And then learn the key principles of how money really works, how to make it work for you. Mm-hmm. And then we have tools to teach about index accounts, living benefits. That's the new kind of life insurance that you don't have to die to use.
Yes. Yeah. We have another person who was telling me about that, where you can get life insurance, and then it's kind of like you use it, as opposed to...
Yeah, so we have 20 different triggers. They're not all they're not all created equal. Mm-hmm. So look into it. Talk to me.
Can anybody get life insurance?
No.
No matter what age?
No.
Okay, what's the deal with that?
So we have to qualify based on our health. The insurance companies are looking at what's their risk. Not everybody qualifies.
Okay.
I have a client. He was an ex-Navy SEAL working in Afghanistan. There's no way I could get life insurance written for him.
Why?
So he was a target he was living in a high risk area where he was highly likely to die.
Oh, he was.
Yes.
Oh,
the risk is too high. Like skydivers or certain mountain climbers. Like there's people that just don't qualify because of their hobbies and their activities.
Really?
There's people that don't qualify medically. But what we did for him was did a Roth IRA, so we could still get him into that tax-free bucket, put money in post-tax, let it grow without being taxed, and then take it out tax-free. We could still do that for him even though he didn't qualify.
So it was because of where he was living?
Where he was working, yeah.
Where he was working. Yeah. And so people who also have, like, what if someone, like, rides a motorcycle?
That's probably okay.
Okay. So but someone who skydives is not.
High risk, and it's hobby. So occupation is one thing. If you're a firefighter, police officer, you're highly trained in that risk job that you're doing. But if your hobby is skydiving or major, like my ice pick climbing or serious mountain climbing, race car driving as a hobby, you're not trained at that same level to experience the risk.
So if you're not doing it as a job.
Right.
Now, do you go that based upon numbers of people who die, or just kind of like, no, we're not going to do that.
Highly trained environment makes a difference. Yeah.
And they have to actively be doing it Do you have people lie to you and go like, oh, no, I don't do anything? Or what if they get a life insurance and then they decide to do all that kind of stuff? Do they have to tell people? I don't know how any of this works.
I know. There's always a 2-year contestability program.
2 years.
A life insurance company is obligated to go back and do deeper research if anybody files a claim within 2 years.
Okay.
And so if they've misrepresented, not told the truth, lied to the insurance company, and an event came up, they're not going to have
Okay, so now you know what I'm going to ask. What if someone can people take out policies on other people?
If you have insurable interest, meaning if that person passing away will affect your financial life, yes.
Can someone take out a life insurance policy on someone, their spouse, without their spouse knowing?
The person whose life insurance, the insurance is being put on, has to sign the policy. If they're 18 or over, they have to sign the policy.
So then they have to know. They have to know. Okay, next question. So if someone takes out a life insurance policy on their wife or their husband, we'll go back, whatever it is.
Go either way, right?
Okay, and 3 months later, they commit suicide. This is getting very dark, but we've seen too many fucking movies. I listen to way too much true crime. And then 3 months later, the woman who's never had a history of depression, or at least that we know of because she hasn't been to the doctor for it, commits suicide.
Well,
that sounds a little...
The first thing is that 2-year contestability.
Yeah.
Even if the husband or wife took their own policy out and then committed suicide, it's not going to be paid.
So it has to be 2 years.
That is one of the criteria that falls under the 2-year contestability period.
Okay, so 2-year contestability. So what if the spouse then develops cancer and dies before the 2 years is up? That's
okay.
That's okay.
They have disclosed everything. They didn't have any symptoms. They didn't know they had cancer. They didn't know there was something wrong.
Okay. If someone, we'll go back to the suicide. If someone commits suicide, does life insurance pay out? Or is that like...
Past the 2-year contestability period.
That's okay. What if they get murdered?
Dark today.
If you listen to true crime, you're always like, oh, and then there was a $2 million, well, at this point, that's probably not that much, but $5 million policy. Oh, and so if someone takes a really high policy out, like, is there a limit based upon their income? Like,
it's based on income.
Okay.
Based on how old you are and your income. So somebody who's young can have 35 times their income. Somebody who's our age, 10 times your income.
Okay.
So, I mean, that's pretty good criteria.
What if it's a woman who's never worked, she was a stay-at-home mom?
Then we can establish what cost would need to be replaced to take care of the family and the household.
What if the kids are grown?
Then...
I mean, she worked and contributed, and they say the work you do in the home is an enormous amount.
There would be limits. You can still do policy.
What happens if someone gets murdered? Do they have to wait for all of the court and all that kind of stuff to happen before they get paid?
Well, it would be based on the death certificate. So if say she's murdered, investigation and she's murdered, what was the cause of death? It doesn't. That's the police's involvement on who. You're going into the detective's job, not mine.
Well, no, I'm just like, how long does it take to get the money? Like, so if someone's murdered and, they don't know who killed them or whatever, and they're doing their job, like, does the husband, before he's cleared, get the money?
I never had that case in front of me.
Well, I mean, it's good. We don't want people being murdered. But really, you've never had that case in front of you?
I've only had 2 death claims. We pay 9 living benefits claims for every 1 death claim that we pay.
Okay.
So most of my experience has been in setting things up and the just-in-case things like heart attack, stroke, cancer, things like that happen that we...
But most of your stuff is that you can use this money while you're still alive. Which is great, which is how it should be, as opposed to I'm paying all this money and then sorry.
And we can use it for arbitrage. You can have an asset.
I don't know what arbitrage means.
You have an asset that you borrow money against as collateral. Mm-hmm. And it's still growing, but you're just using it as collateral to do other investments. So we have people that do flipping houses, do investments, real estate, things like that, where they act as their own bank. They fund it first, overfund, say maybe $100,000 over 5 years. Mm-hmm. And then they take loans out to buy a house, flip it, and put the money back. And they're acting as their own
That's
bank.
Great.
Yeah. And you could do that at $50 a month, $500. You don't have to do it at $100,000 a year. We bring that down to all Americans. We talk about $5 a day. So if we're talking to 20 and 30-year-olds, we're talking about $150 a month just to start your savings habit.
So this is different than regular life insurance policies.
The tools that the wealthy have been using for over 100 years, we are bringing to all Americans. The wealthy have been using these tools for over
And what is... Okay, so it's life insurance, but it's just different tools within the policy that were not available to other people before, or is it a different kind of life insurance?
So the new kind of life insurance has the living benefits. That's where you can access it in case of a major illness.
So if anybody's out there getting life insurance, make sure it has living benefits.
Yes, absolutely.
And is that becoming more standard now?
It's not. It's only about 5% of life insurance companies have true living benefits. I have a lineup sheet that shows 10 different companies and what levels they offer.
And what's the name of your company that does it? Anchor?
Yes. Anchor Financial. I'm under Five Rings Financial. It's the
Five Rings. And you guys.
But we work as a broker. We have access to 40 different companies. Mm-hmm. So we work with 4 or 5 of the top living benefits life insurance companies in the country.
And only 5% of them offer living benefits. Mm-hmm.
And some call them living benefits that aren't the same level. I was reviewing a policy for a client. They had terminal illness, and the criteria was they could access 50% of the policy if a doctor said they had 6 months or less to live.
Oh, that's bullshit.
How many doctors are actually going to put... You're going to be pretty terminal to have that down. Ours are between 12 and 24 months.
Not only that, the doctor doesn't know the exact timeline.
Well, if you're terminal, they have an idea. So that's why ours is 12 to 24
But I have a friend who was told, unfortunately, he passed away a couple weeks ago, and he was told he had 6 months. Maybe a little bit less. They're like, we're going to try to get you till Christmas. 5 fucking weeks. 5 weeks.
Mm-hmm. That's pretty severe. We have a client
It's pancreatic cancer.
Yeah, that's the worst.
That's the worst you can get.
We had a client that had a brain tumor. Mm-hmm. Had $1 million policy, so he got to access 90%. The doctor had given him 6 months to live, but he took the money and went and got other treatments and got to take care of his family and not have to work. He lived for 2 years. So they don't know, but they have a window. They kind of have an idea if you are terminal and your life expectancy is affected. How long you'll live, right?
I wonder if AI has AI had an impact in this business yet that you've seen?
So. It's too soon.
It's too soon.
The actuaries, they have their mortality tables. They know how long each of us are supposed to live based on how old you are now, when you were born. They do all that. So they've got that down. They've been doing that for 100 years.
But I would think that AI will give them more not detailed. It's not the word, better information, because you have the ability to get it so quickly, and you have more of a pool to get all the statistics from.
An interesting thought. They have a pretty good pool already, though.
Yeah, That's so. If anybody is looking for living benefits, they need to really take some... Well, they need to call you. They need to hit up people who are working with this at all times, because you have the information.
That's right.
It's amazing that only 5% of the companies offer that. Yeah. Do you see that changing? I mean, do you see it growing?
I do see it growing.
Yeah.
I think what what is growing is that consumers have more information, have more resources to do
Sure,
their homework.
so they're going to, why go to the one who's not going to give you anything when you could go to the living benefits?
And some companies are saying, using the term living benefits, and they might only have one versus 20 different triggers that might happen to you. They might only call the cash value living benefits, and that's just not the same thing.
And how old do you have to be to start one of these?
15 days old.
Oh.
So we do something we call $1 million baby. Mm-hmm. Parents will start something on their child for the tax advantage strategies of saving for college, for being an entrepreneur, buying their first house, whatever it is that child grows up and needs the money for. But all the money can go in post-tax. It's like a Roth IRA on steroids. It grows without being taxed, and you can take it out tax-free at any time for any reason. So you could help them buy their first car. You could help them, if they don't want to go to an accredited college, they want to do a trade school or go to Europe and go to culinary school. They can use the money however they want.
And how difficult is the process? So, because I'm going to have to, I'm going to do this for my son.
Yeah.
So if I'm like, okay, I need to get one for TK, how long, what's the process like?
It's pretty easy. We sit down, we do an e-application. I do it with you. I do it for you while we're sitting together. Mm-hmm. The TK is involved, or you've asked his permission if he's 18 or more or older, right?
Right.
But you just do the application. It goes through underwriting. They pull databases, like 5 different databases, to get so much information that we can write up to $3 million of permanent and $2 million in term with, most of the time, no blood work. You don't even have to do
and
that go to the doctor or have a nurse come to your house anymore most of the time.
And restrictions are obviously if there's a pre-existing medical condition, which there's not. But I'm just thinking now, what about someone who's neurodivergent or on the spectrum or things like that? Are there restrictions for kids like that?
There are. My son is on the spectrum,
so is mine.
and he has a policy.
Okay.
So it depends on what else is going on or what severity. I had a referral sent to me because the grandchild they want to help is, as she said, severely on the spectrum. He's nonverbal.
Okay.
And only 5. I might not be able to help him with this. We might have to go to some other tools for him.
Now, why wouldn't you be able to?
And we don't know that he'll function as an independent adult ever.
Oh, and he needs to be able to do that. Mm-hmm. So if someone is on disability from the state or the government, then that's not something.
That's not a deal breaker.
Oh, it's not a deal breaker.
You could be on disability, you could be on SSI and still be fairly functional, need some assistance. Then there's different companies that have different sweet spots, or they might not offer all the living benefits.
And are medical or pre-existing conditions like deal breakers at all? Like chronic?
They can be.
What about like diabetes or something like that?
I do have a company that is very diabetic favorable that we might be able to still write that.
So it's just having the conversation and
it's case by case.
It is.
And like if somebody's had cancer, most cancers after 5 years, we can look at writing a life insurance. After they've been in remission for 5 years.
Right.
We can look at another policy. So there's just different criteria based on what's going on. How much did it affect their life? Are they past a certain...
How old are they? What's their... Do you look at family history?
A little bit.
Okay.
Mother, father, and siblings.
Okay. Oh, okay.
Mm-hmm. That doesn't mean it's a deal breaker either. Clients whose parents have passed away from heart attack or cancer.
Do you take into account things like their current health? Like, do they work out every day? Do they work? I guess. Obviously, kids aren't working, but that kind of stuff.
Sometimes. So we had an agent who had a bodybuilder as a client, and their body fat is so low. He looked on a table of chart.
He looked sick.
He looked very overweight.
Oh, he looked over. Oh, because
his weight and height didn't match.
Because the stupid BMI is bullshit.
Yeah.
That's so old school.
So he took a picture of that client and wrote a cover letter and explained why the height and weight chart didn't apply and was able to get him coverage.
Yeah, that I haven't they come up with something better than BMI, because it makes no sense for people who are in very good shape.
We're the first underwriters, so we get to get the whole story from our clients.
Okay.
Really understand what's going on and advocate for them with the insurance company. If there's something that we can give them better information or a larger picture of what's going on, it might make the underwriter more likely to say yes.
Okay.
And then relationships that we have with some of our carriers make a huge difference. A couple of companies that we have our whole underwriting team just for Five Rings Financial.
Okay.
So we have a better relationship, and they know what kind of business we write. We might sometimes be able to get something borderline through because they know how good the book of business is that we write in general.
I think I mean, life insurance, we have these preconceived notions of life insurance. Of course, I go right to murder, suicide, killing, all that kind of crap. I feel like it should have a different name. You know what I mean? Because it sounds like such not even a savings plan, but like an active kind of
That's
plan.
why when I'm networking or meeting people at first, I don't say life insurance agent up front.
Right.
I wait until they get to know what benefits we can give them, what kinds of things we can use, the tools, and then loop them in. It's life insurance. Sometimes. It's not always, but I do have products that are not like
it's not a good
life
name.
insurance
Yeah,
policy. But they tried to sell it as death insurance 100 years ago. Nobody would buy it.
Well, hell no.
Because what was it? What was the purpose of life insurance?
Well, when you die, so your family has money to pay for burying you or whatever the fuck they need.
While they go through probate.
Right.
And the tax-free money to go to the family.
Right.
But they also wrote in a lot of really cool things in the tax codes that gave us tools that are tax favored. And the rich, the wealthy did it for themselves. They did it for their families. And the Rockefellers and the Vanderbilts got together with the congressman, and they put some really cool tax codes into life insurance.
One of the things that I encountered, my father, he had a few life insurance policies. As I said, my mother took care of everything. She unexpectedly passed away. He had some medical issues, but they had life insurance policies for years and years and years and years and years because they thought he was going to go first. You know how that works. And he didn't live, he lives 3 years after Mom, just because we kind of propped him up for a while, the kids. But what happened was he was fine, but because he didn't have her managing, not just that, but managing his medical stuff, he wasn't, God, you have a million pills. It's hard for someone like completely normal to be able to manage that shit. I was like, did I do this right? When he was living with us. But what happened is when we finally got him and we got a hold of his finances, and he had done some really not good stuff because medically he was getting confused. He didn't have dementia or anything like that. But when you have that many pills, you don't take them right.
As a consequence.
He missed some payments. After he passed away, he had missed 3 or, it wasn't a lot. All that money he had paid into for all those years, they're like, sorry, he missed some payments.
Wow, that's sad.
I was like, that's just bullshit. And there were like 2 of them worth a lot of money that they had paid into for 30, 40 years. I'm like, really?
So think about your car insurance. If you miss 3 months, is your car still insured?
No.
Not. It's the same thing. And so it's on the
But he didn't have the ability, as he got older, because he was then hit 80, to manage it properly.
Yes. And that's where it's on the agents. It's our responsibility.
Okay.
I send postcards. We do phone calls. I do an annual review with my clients every year. It's not the norm in the business, even if it should be. So,
because I was like, that's some bullshit. I understand if he didn't pay, but he has given you this much money, and you're going to be like, yeah, sorry.
Yeah, and probably he didn't have an agent in the industry that had helped them with that. It just rolled up. To the company or to an 800 or to somebody that didn't even know what they were
then
doing.
I think when I was talking, they're like, well, we sent an email. I'm like, the man's 80. He doesn't know how to check his email.
Right.
He thinks his phone's broken every day. You know what I mean? I'm like, come on, people.
Yeah, that is why it's really important to develop relationship with your agent. Have somebody that will be there for you, that will reach out to you and let you reach out to them anytime.
And so what happens, I mean, we have an aging population. People are living longer.
Yeah.
Therefore, they have more medical conditions they're going to be dealing with because they're living longer.
Yeah.
So what do you suggest to people who have older parents? Maybe they're in their 70s or maybe they're in their 80s. Cognitively, they're still kicking it and killing it and doing great. So therefore, it becomes then you have this person who's doing great, or maybe they're just starting to decline a little.
They might be hiding it a little.
And you have the child who's like, I want to help you. I'm fine. You know what I mean? I'm wondering are there obviously everybody should have kind of like, and the old school people have paper.
Yes, they do. I have a financial inventory binder delivered to my clients that it talks about what are wills, trusts, do you have medical directives, power of attorney, all of that. The earlier you can have that in place before there's any dementia or any medical problems, the better.
Have it in place when you're 40, right?
Absolutely.
Why not, right?
Yes. Every married couple should have those pieces.
A binder with a will, with whatever policies they have.
Yeah. Every adult child going off to college or to a trade school or to go work, whatever they're doing, once they're 18, the parents no longer have access to help them. Every adult should have at least those pieces of paper and somebody responsible if they're incapacitated or if they're not able to advocate for themselves. They have somebody there to do that for them. So it doesn't have to be a spouse.
It could be a friend.
It can be somebody you trust.
Someone you trust. Yes. You're a friend you've known forever, and just say, just so you know, this is all here.
And they should know where it is, that it exists, that they are responsible. When I put a policy in place with living benefits, I ask my clients for 3 references for emergency backups, and I send them a letter and I say, here's what your friend just bought. If any of these things happen to your friend, it's your responsibility to call me. They might not be able to.
That's fantastic.
Yeah.
Everybody needs to go to Nicole. Oh my gosh, that's
So
that's a level of customer service that I don't think is very common.
Yeah. So I've looped in at least 3 or 4 people that they've told me they want me to loop in. They have given me permission to send that letter.
That's great. So if someone wants to get started, the first thing, is there an email? Do you have a website? Maddie, you'll share all that stuff?
We can post that all in there.
That's great.
Yeah, I think the first place to start is come to a class. If ladies come to Wine Women and Wealth, come hang out with us.
So if you're in the PNW, if you're in this area, come there or
and we're national.
Oh,
you can
okay.
Still reach out to me and I can connect you.
So is Wine Women and Wealth across the country?
It is.
Oh, isn't that great?
Yeah, it is. And so most my financial literacy classes that I teach, we call them Money 101 in most areas of the country. So I can connect you to somebody near you, or we have virtual financial literacy classes. We have virtual Wine Women and Wealths. I'll go jump on there with you.
Yeah, that would be wonderful, and we can put it on the Vitality Ventures Group website as well. We should definitely do that. We probably should do that for everybody I talk to, huh? Just thought of that now, huh?
Yeah, I've been doing it. You need a resource.
Oh, you have? Okay, I'm sorry.
Of course she is.
I never go. Isn't that horrible? I'm like, oh.
That's why you have a Maddie.
That's why I have a Maddie. I know. I wouldn't be able to survive without Maddie. We need to take her to Hawaii. She's like, oh, it's on recording. It will never go away. So what do you have personally planned for the rest of your summer? Are you going anywhere? Do you believe it's the middle of August?
I don't.
What the hell, man?
I know. The fall gets really busy for me. I just came back from Colorado.
Where in Colorado? I used to live
Denver.
there.
That's where our home office is.
Okay. I used to live in Fort Collins.
Oh, yeah. Uh-huh.
Yep.
Right. So we have a financial academy. It's a life insurance academy that it's by invitation only. Puts on once a year. Mm-hmm. Until this year, we have had to go to Atlanta for that, and this was the first year that we did it in Denver, so we could bring more agents along. So there were 400 of us there.
Wow!
The first one that I went to was a couple years after they'd started them. There was only like 20 or 30 people. So we're growing by double digits.
Well, but even with the Wine Women Wealth, because you did have one of your sessions here in the Vitality Ventures Group offices, and I love that you said to me, because you're very calm about it, and I think it's very difficult for people when they're starting a new business because they get frustrated because you put so much time and work and energy into it, and one person shows up.
That happens.
It happens. And that's okay.
It is.
Because you just keep going. Because then it becomes 2 people and it becomes 3 people. Because when we put ourselves out there on social media or wherever we're putting, we think everybody's watching and nobody's seeing anything. From a marketing point of view, I think it's like we say it takes 13 to 14 interactions before people even it even clicks in their brain.
And then when they do start seeing it, they don't necessarily interact with you.
Of course not. And so people who are like, put so much effort, just put shit out there. Just keep on throwing.
Consistent.
Yep, be consistent. Keep on putting it out there. Eventually people go, oh, look at that.
Yeah, our Vancouver Wine Women and Wealth, I started 2 years ago. We had 4 ladies in the room. And now we get 20, and it'll just keep growing. That's 2 years from 4 to 20. So.
It's always 2 years. It's like that weird number. It's the 2-year mark where you just struggle and grind it out and feel like you're yelling into the wind and nobody's listening, and then all of a sudden something happens after 2 years.
Well, if you're consistent.
And
you're still there.
Well, of course.
People have been watching and maybe they've been interested, but it hasn't fit or it's not the right time. It's on everyone else's timeline, right?
Most people quit before 2 years because it's hard. And can be very disappointing and frustrating, and you're like, oh my God. But,
when you were worried that there might only be a few here, I said, that's okay.
Yes.
Whoever's here, you needed to hear it that night.
I don't care. You live long enough, you realize how things work. You're like, that's okay. Well, even with anything, even if you learn one tiny little thing or help one person, it's enough.
Absolutely.
It's a huge amount to help one person in this world, Well, thank you, my love, for being here. This is great. Your hair's purple. That made me happy. If you had shown up with non-purple hair, I would be very disappointed.
All right, so after that, I know for a fact I know less about money than I thought I did. I'll see you at the next Wine Women in Wealth. You can look below in the description to see when we're meeting up and where next. While we're here, let me remind you to subscribe. We wouldn't want you to miss out on an episode. And as always, follow our socials. You can see everything down in the description. Thanks again for tuning in to Vitality Vault. How are you using your power?